You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is financial consultant and 5-star wealth manager recipient Richard Knowles of Knowles & Associates in Vancouver. Welcome to the show, Richard.
Thank you for having me, Jim.
The Bank of Canada today did have a news conference scheduled to talk about the setting of the central bank rate. However, that news conference was canceled in light of the shootings on Parliament Hill. They say the bank rate will be maintained at 1%. And by the way, our condolences and prayers for the armed forces members who have lost their lives in the last few days in Quebec and in Ottawa, protecting Canadians and respecting those who lost their lives protecting Canada. Anyway, Richard, any surprise that they're maintaining the 1% rate?
Not really. I mean, this is really expected. It's rather refreshing in a sense not to have some big announcement that they're just holding the status quo. I mean, I like that. It's more analytical and it's just to get the job done. So I like less pomp and circumstance is always nice.
The TSX has lost 10% of its value since it hit record highs just a few months ago. People are worried about their pensions. Should they be concerned?
Not really. Pension management is a very well-established, you could almost call it a science. I mean, there's a balanced act that goes on with pension investments. There is a bit of a risk in certain individual securities, certain pensions. If you're looking at Canada Pension Plan, it has a well-diversified program, including fixed income bonds, dividend-paying stocks, some of the largest in the world, I suppose, some of the big dividend payers. And they can go global, so they can diversify, and there is some currency issues with that, but nothing that large pension funds can't manage. So consequently, what we're really seeing is a portion of the stocks that are in the pension fund is now dipping. It's not a permanent dip. We really just see this as a correction. It may be what I call now a wolf market, as opposed to a bull or a bear, where it'll be targeting certain hunting techniques to go find the really good names. But it's a great opportunity. Right now, the price-to-earnings ratios, if you look at companies across Canada, just Canada alone, some of the best deals in the world right now, actually. If you look at price-to-earnings ratios of various companies, and they're trading at multiples which are ridiculously low. You know, where you can find anything under 10 or 12 is a deal anyway. But there's some trading as low as 4 and 5 times multiples, and that's an amazingly good value. And assuming the company is sound, it's got otherwise good products and services, etc., and it's going forward with good business plan, then this is just go get the sale. Everything's on sale. So this doesn't last long because the sale is too good, and there's lots of money. In fact, there's record money sitting on cash on the sidelines, waiting for these opportunities to occur. I believe it's short-lived. There will be good purchasing times right now. Actually, every day this week is a good opportunity to be picking some good names. If you're a good pension fund manager, you're looking at every day, and that's what's giving us support at these levels. You're not seeing some bottom dropping out of the markets. The reason is that there's lots of money buying, and once you hit certain critical numbers, in other words, really good sale numbers, you know that there's a sale all week, but you want to get it right when it's dipping at the lowest point in the week if you can, or in the month. Could be going for another couple of weeks. This is earnings time, by the way. The third quarter is always a little bit up and down. We're always getting the most raucous times happen in October, November, typically. So this is just an opportunity to go buying. It's good news. I like the fact that it shows its weakness, as it typically does 80 to 90% of the time in October. This is the weak moments, and if it sails through here, you almost get worried, when is the correction going to happen? Because this is the most common time that the race takes a breather. And so it's very good news, I think, and I don't think pensioners have to worry.
We'll have more with Richard Knowles right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking to Richard Knowles, of Knowles and Associates in Vancouver. The BC government announced its taxation rate for the LNG, liquefied natural gas industry. And you said these look like very competitive rates. No real official comment from the industry itself. They say they're still checking the numbers. But Richard, you thought, they're getting a pretty good deal to start off.
Well, when you consider the fact that Mike de Jong has already halved the rate that they originally had believed that they were going to charge. I think they moved from 7% to 3.5%. And even above that, think about it, this is a 3.5% rate once the LNG company is established. So in its development stages, in the initial stages of building the LNG plants and getting up and running, they have it again. This tax is halved again to 1.75%. Now, anybody borrowing money, for example, if you're looking at good rates today, 1.75%, if you could get a business loan for that level or, have to pay taxes at that rate, I think people would be very happy. And I think that the fact that we have made it extremely attractive is a combination of both competitiveness. We have to look at world competitiveness, but also the fact that, remember, you have to respect yourself. This is something that a lot of people don't understand, and we're willing to sell ourselves short at any turn to make business happen. I think that's a very dangerous place to go, because once you start doing that, you will be manipulated by the very people that are your clients. If your client, in any respect, whether it's in, what I do, financial services, if it's something that you do in business, if you're a selling retail, if you lose the respect of the very people that are doing business with you, then you really lose your business. Because if they continue to think of you as just a source of getting the cheapest thing possible, then they don't respect the services you provide, and they don't respect the fact that you might be a family business with kids to support. I want to thank all my clients for doing business with me as a family business and acknowledge that the money that I receive, for example, puts my kids through school, makes a better community through the support that I give back to the community, make sure that a family is doing well, that I put food on the table. I mean, that's a very welcoming thing to acknowledge in business that people have lost sight of. So I think that respecting yourself, respecting the resources we have, not to sell them out and give them away, Nestle's was taking water out of our ground for free. Not giving it away and demeaning its value is an important point, and business people will rather do business with us in the long run. Maybe we'll lose a little bit of business initially, but we'll get them back. And we have the gas. Ultimately, when you hold the resources, you're holding all the cards. Eventually, they'll want to do business with you. So, don't sell yourself out. Don't give it away, and certainly give incentives that are competitive, but acknowledge and respect yourself while we do it.
Richard, thanks a lot for chatting with us today.
Thank you. I appreciate your time.
My guest has been Richard Knowles of Knowles and Associates in Vancouver. If you have any questions for Richard, you can send them to Richard K, that's the letter K, at customplanfinancial.com. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. We're also available on YouTube. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.